Good afternoon. This is Ken Long with the review of the Tortoise Weekend Trading Reports for August 27th, 2016. Market is in bullish, quiet conditions. On an annual basis, using weekly RSI 14, we're in the higher end of neutral at 65 out of 100. The 10-day NDX is in the low end of neutral at 31 out of 100. Looking at the market mosaic price with respect to the 200-day moving average is green bullish at 6.54%. The slope of the 50 white bullish at 0.51. ADX is an untrending 12.8. Correction, a weak trend at 12.8. The risk index is the 30-period moving average of the VIX divided by the 10. 1.0 is the threshold between risk on and risk off. Right now that reads at 0.977, so we have dipped into risk off. And you can see the 90-day histogram of that indicator. We've gone from -2 sigma to +3.25 sigma down to back to 0, and now tipping into the negative side. That is a warning for potential volatility spikes, and alerts us to make sure that our swing trade stops are in place to protect gains. We'll be making a blended month rebalancing change next week. You can see the current holdings and then the leaders as of Friday's prices. Theoretical exposure in the ETF2 is at 100%, as is the model portfolio. Quick look at the broad weakness this week. Looking at the BMR model portfolios for the 13 and the 32. Just about everything down except for US Tech. Looking at the ETF Max now, these are the top 50 blended returns for the 1,000 ETFs in our database. And again, you can see the key leaders have all took a big hit this week in the precious metals and basic commodities. Saw some strength in Russia and energy, natural gas. The S&P 500 top ranked stocks on the basis of BMR. Chesapeake Energy, continuing that energy theme. Consol Energy, Williams Companies, big move in Micron Technology and NetApp and Urban Outfitters. Even Nordstrom's getting in on it. And Best Buy. Market health check. The vertical blue lines are 10, 20, and 30 days worth of look back. Here's the 60. See the river has narrowed considerably. Prices pulled back to the middle of the river. Slope of the 10 period is down. The slope of the 30 is flattening. You can see that slope is approaching the 0 line down here. These are all the places in blue where that slope has crossed the 0 line, tipping up or down. The rising 200-day moving average. If the bottom of the river does not provide support, then I'm looking at targets at 210 and 215, and even as far down as 205. Looking at the RLCO framework and the OWL framework, got a sell signal in the S&P here. And again, if this river collapses, I'm looking for targets down here at the RL270. I would add a second position if it breaks through Z-2 in order to front run this lack of support in here. This would be where I see support occurring here or down here at the belly of the dragon previously. But this is certainly a short side pattern developing. Not much change in the ETF2 regional report. They're all above their 4-month moving average, so at 100% invested, 0% cash. The S&P at 31 is better than the globals at 28. Inside the U.S., strength remains in the small caps, then the tech, then mid caps, and then the S&P. Two strongest sectors remain Latin America at 53 and emerging markets at 42. Two weakest sectors being Europe, IEV, and then the globals of EFA. Not much change in the world market model. Strength remaining in Taiwan, Philippines, Indonesia. China remains above average. Japan below average. Everything U.S. above average except for the Dow and the S&P. Silver and gold remain strong, although they did give back a nice chunk this week. Everything Europe below average. ETF 2, the top 30, shows the same situation as the BMR. Oil and gas, however, have moved up to the green and white, as has Indonesia and China 25, and also another China fund. Weakness now in Alerian MLPs, showing white and green. Dow 30, Caterpillar and Merck have moved to the top of the stack. Microsoft continues to march up along with Procter & Gamble and Apple. Weakness in previous leaders, AT&T, DuPont, Chevron, Pfizer, and United Health. At the bottom of the stack remains Coke, Disney, and McDonald's. Shifting to the daily report, we got some channeling signals here in Latin America, Asia less Japan, and the European 350. Quite a few other ones to choose from in channeling and overreaction, and also in the 5 days down and in the auto framer, so a lot to choose from here. Walmart, United Health, McDonald's, and Johnson & Johnson all testing out well in the auto framer, and quite a few RSI2 single digits to choose from. Same story in ATF 30, lots of channelings. Silver and healthcare testing out well in the auto framer. A couple 5DDs to choose from as well. Auto framer key price levels. And in the regression line fractal framework, the deep value plays are in the top shelf in green here. McDonald's, Coke, GE, Verizon, ExxonMobil. And the ones that are the relative strength leaders, the ones that are the furthest above their own RL270, American Express, Apple, JP Morgan, Merck, and Cisco. Daily squeezes offering some opportunities for day trading 1 day at a time with these symbols here. Market mosaic just showing the sideways tight channel. There was maybe some downside hints on Friday, so we're starting to get closer to the silly season and the elections. Regression line slopes of the 10, 30, and 90. The 90 remains at the top of the normal channel. 30 is pulled all the way back to the baseline, and the 10 is starting to slip a little bit. That's not inconsistent with a pull back to the bottom of the river, as you see here, after a nice run up. Remains to be seen if this looks like this, or whether it looks like time for a sharp drop. Some reference charts. And that's everything I want to cover this weekend. Keep those trades framed, risks measured, and stops respected. Time is ripe for some kind of surprise, sharp, sudden move. And let's be prepared.